Hello everyone and welcome to Commodity Culture, where we break down the commodity space for both new and experienced investors. My name is Jesse Day. Before we get started, standard disclaimer, nothing here is investing advice. Do your own due diligence. And today's guest is the author of The Endgame Investor, a goal-based approach to protecting wealth and profiting off Fed inflation. It's Rafi Farber. Great to have you back on.
Great to be here, Jesse. I'm glad to join your culture of commodities.
Yes, and we're very happy to have you every time you do come on. So I want to start with the reverse repo market. This seems very confusing. So could you break it down for us and how it affects the banking sector and also the issues it is currently causing and why the Bank Policy Institute has called it a black hole for bank deposits?
Well, I don't have a degree in reverse repos. I don't think the academic system has come up with that yet. And these things are new. They've only really existed in any good amount since the 2020 lockdown printing, and a little bit in 2014 to 2018. A little bit by today's standards. But now there's like 2.4 trillion dollars of this extra money. So basically, what it was is that the Fed printed so much money in 2020 and 2021 that the banks couldn't handle it all, because it costs money for them to have dollars on their balance sheet because they have to administer that. So instead of holding all this cash, earning the banks, no interest, and the cash didn't belong to anyone, it was just given to them by the Fed. So it's not in somebody's personal deposit account, is what I'm saying. They didn't have anywhere to put it, so the Fed said, okay, give it back to us, and we'll give you interest on it for the securities that we give you in exchange for the cash. And the idea was they needed to control interest rates, so they needed to put this money somewhere so it wouldn't flood into the bank system and push interest rates way back down when they're trying to keep the overnight rate at whatever it was, 2, 3, 4%. So they had to take this money out of the system. And now there's a $2.3 trillion of it. And if you look at where this stuff actually is, it's all in money, basically all of it. 95% of it is in money market funds. And money market funds, you might not think that you're invested in them, but if you have a brokerage account and you have extra cash in your brokerage account, you are. Most of the time, invested in money market funds, and your brokerage will pay you interest on the cash that you have in your brokerage account because they put it in money market funds, which basically means now they're putting it in the reverse repos and getting interest from the Fed. So, excuse me, when you have extra cash in your brokerage, it's going into reverse repos, and you're getting interest on that. So that sounds fine. Like, yay, interest on cash on brokerage accounts. So fine. However, there is the consequence of that is that you will, and you might have seen this already, I've seen it in my email box, that you will get an email from your brokerage saying, please take the money out of your deposit accounts at your local bank and put it with us because your bank can't pay you interest on your deposits and we can, ha ha ha. And you're like, wow, great, I'm going to put the money in the brokerage account and and I'm going to get, interest on it. But what happens to the banks that you take your deposits out of? They lose deposits, which is a contributing factor. I'm not going to say it was the reason. I don't know exactly all the reasons that SVB, Silicon Valley Bank, failed, but that was definitely one of them, maybe a big one of them. And now other regional banks are having problems with their deposits because they don't access the reverse repos. Right? They don't have any of that. All the reverse repos are managed by the commercial banks, the big money centers, and they own these money market funds. So they're fine. That's why we're seeing like JP Morgan, their earnings go crazy and their stock is going up and the regional banks are crashing, and this is what's happening. So what's happening is a huge centralization of the banking system. And now what did you say? The Bank Policy Institute? I lose track of what all these names are, but the Bank Policy Institute, which is like, they're in charge of bank policy because they're really important, whoever they are. I never heard of this institution outside of a few weeks ago. I didn't know there was a policy for bank, but an institute for bank policy, or there's hundreds of them. I don't know. But they said it makes sense. Like, if you're going to incentivize people to take money out of deposit accounts and put into money market accounts, well, banks are going to lose money. Okay. And that's crashing the banking system. So their advice is, why don't you just take these $2.3 trillion and put it back in the banking system? That should be fine. And then the Fed, and then this is ridiculous. And then Fed officials, the trial balloon people, are like, yeah, we could do that. We could like take $2.3 trillion out of reverse repos and put it back in the banking system. That shouldn't do any problems. It should be fine. And so that, like, two things would happen. Like, all the money market funds that are invested in reverse repos, but like your brokerage sends you an email, says, oh, you're not earning interest on this money market anymore. We're sorry. And then everyone says, oh my God. So I'll take the money out of the money market funds, and then they all get these redemption requests at the same time, and then it crashes the money market system, and then people who thought they had cash in their brokerage accounts, so suddenly they don't have cash in their brokerage accounts because like, oh, the money market fund broke. I'm not saying that's definitely would happen, but it seems pretty plausible that it could happen. And then all of a sudden, all this money, or what it can be redeemed from money market funds, because the rest will be lost, it'll go back into the banking system, and all of a sudden there will be like $2 trillion more in the banking system, which, sounds great. That should do fine for prices and whatever. I don't even know what would happen. We're talking about such gargantuan sums here, and this whole debate is ridiculous, and nobody in the top echelon seems to know what they're even talking about, and the ignorance is scary.
Yeah, well, that was actually an awesome breakdown, and it's crazy to see so many of these cracks appear in the system. And I want to touch on a recent video you did on your YouTube channel where you mentioned that the US dollar is not going to die on international trade deals. It's going to die in the streets of the US. Could you expand on that concept for us?
Yeah, so this is more of a logical point, and I get some flack for this because these news stories of the dollar, of different countries looking to bypass the dollar in international trade, and gold bugs get really excited. And again, I don't want to say that it's worthless news or that it's not significant in any way. It is, and I'm not ignoring it. But what is happening logically in a pyramidal monetary structure like we have now is that let's say when China and Brazil make a deal over gas, or was it France and Brazil or whatever, it doesn't matter what country and whatever currency, excuse me, when one country says, okay, we're going to use the yuan to buy gas instead of dollars. So what do? What they're doing is they're using the yuan to settle a dollars-denominated trade. It's a nominal difference. It's still a dollar deal, just settled in yuan. And then what happens to those yuan? They're eventually exchanged for dollars. So whoever the yuan is going to can make another dollar deal. But it's not that this is unavoidable in international trade, because the international trade system is based on the dollar, because of the pyramidal structure that's left over from Bretton Woods, right? When Bretton Woods had content and dollars were redeemable for gold, the idea was so that the United States could siphon the wealth from other countries. They would encourage other countries to hold dollars instead of gold. And their reasoning was like, oh, well, if you hold gold, it could get stolen if Germany invades again or whatever, another world war breaks out. Remember, this is right post World War II, and America just saved the world, or whatever the narrative was. So they're like, okay, so instead of holding gold, hold dollars. We'll hold your gold, and then we'll redeem it. If you have $35, we'll give you an ounce of your gold back. So don't worry about it. Just trust our currency. And then Nixon, there was a pyramid, there was gold in it, and then Nixon hollowed out the gold and left the pyramid structure. So in the pyramid structure that's empty and hollow now, the dollar is still the base of it. So there's no escaping that. The only way that a country can truly get around the dollar is not by going above it in the pyramidal layer. That doesn't make sense, because the upper layers of the pyramid are supported by the lower layers by definition, or else they'd be floating in the air and they'd fall over. So the only way you can go beyond the dollar is to get underneath the damn dollar, not above it. And the only thing that's underneath the dollar is gold and silver. So if you have two countries that are trading goods denominated in gold and silver in ounces, they're not making a dollar deal. They're not saying like, I'm going to buy $100 million of gas for you denominated in gold. That would still be a dollar trade, even with gold. What they would have to say is, I'm buying 100 ounces worth of gold, 100 ounces worth of gas from you, country B. That would be getting around the dollar, and they're never going to do that until they have to. Until the dollar collapses, they're not going to do that. And when will the dollar collapse? When it's attacked at home by the Americans in the street, and therefore, from that core, they will not be able to do any more dollar deals because nobody will want them.
Yeah. Wow. Excellent breakdown once again. So I wonder if you think the recent performance of gold and silver is directly related to the collapse of the SVB bank, causing people to flee to precious metals. Signature Bank collapsed. A few of the other ones did as well, a crypto-focused bank. But I'm wondering if you think that some people realized that their money isn't as safe as they thought it was, and they fled to a safe haven asset, or is it more complicated than that?
I don't think it's that simple. When I get these sorts of questions, and I've been following gold prices for long enough to see that they never make sense in the short term or even the medium term, right? So it's always tempting to build a story about short or medium term movements in gold and say, well, this happened, so therefore Y happened. And sometimes it's true, right? But it's more often not true. So it could be that people are looking for a safe haven, so they escaped dollars and went to gold. And you'll definitely hear that among the gold bugs. But the problem is, and we have to recognize this, that everyone lives in their own echo chamber, including ourselves. Like, we're focused on the gold industry, we're focused on commodities, so that's what we hear. And we follow people who agree with us and they say certain things. And we generally try to stay away from people that disagree with us and we don't hear what they're saying. And much of what the other side is saying is probably false. But they're probably also, saying some truth that we miss because we don't want to hear it. But I'm part of the echo chamber also, but I have to realize that. So my answer is I don't know why gold is moving exactly why it's moving now. I just know that inevitably it's going to head there. It's going to head up and up and up because that's history. Now, the question is why am I so focused now and saying that it's going to head to 50% backing of the dollar, 100% backing of the dollar, which would be like $50,000-$60,000 an ounce eventually. Why am I saying that now? Well, because you have these massive gargantuan piles of money in different pockets everywhere. We just talked about reverse repos, but there's other things. There's all the foreign holdings of treasury bonds. And there's the banking crisis again that you just talked about. And it feels to me that one more financial crisis, the Fed's going to have to print $10-20 trillion just to touch the exponential curve of the debt pyramid, right? It has to go in an exponential curve because the more people that are in debt, the more debt they need to raise in order to stay in business and to stay servicing their debt costs. So it's an exponential curve that just feeds itself, and we're already going vertical. So it seems to be that one more crisis is going to do it. Exactly when this is going to be triggered, I don't know, but it seems like first parts of it already have been, and we're just waiting for a big flood or the big bulk of it to reveal itself, and that could happen anytime now. So get ready and don't worry about short-term movements right now. It's not important. That should be the point.
You mentioned recently that you think we're done with the interest rate hiking cycle and you don't think we'll ever see another interest rate hike again in this monetary system. Now, there are those who believe that there will be a bit more hiking, those who think the Fed is going to pause, and then those who think that they're going to have to cut eventually. So how do you see things playing out from here? And why do you say we'll never see another interest rate hike again in this monetary system?
Because this follows from what I was saying before, that we're one crisis away from the end of this monetary system. Meaning we saw the collapse of Silicon Valley Bank. We're seeing the collapse of other regional banks. The stocks are not recovering. And it makes sense why, because interest rates are sucking money out of the banking system. So we know that. And what happens when these regional banks fail? They're going to have to be bailed out, and the Fed is going to have to start printing again and cutting interest rates probably back down right to zero in the midst of consumer price inflation that's still at 6-7% annual by their heuristics. I'm not giving any scientific validity to those measurements. It's not like I take that as gospel or anything. So the next cut is going to be around 6 to 7% CPI inflation, because I think the CPI has bottomed. It looks to me that way because of inflation expectations and other little indicators. But I think the CPI is not going any more down. That's it. This is the bottom. We're headed back up in consumer prices, and we're headed back up into an environment where the Fed's going to have to cut to zero in order to save a bunch of banks. So if you have that combination where the Fed has to cut to zero and restart QE in an environment where consumer prices are already rising furiously, even at this this temporary trough in CPI, you're going to be in an environment where it's going to click, and the public is going to start to recognize that this is never going to end, and they've got to get out of dollars or lose all of their savings. And some, the smart people are going into gold and silver now. The people that are not aware of this, because most people are not, they're just going to buy whatever they can get their hands on when they realize that they need to, and that'll be whatever they can find first: gold, silver, food, furniture, whatever. That's the hyperinflationary point. So that's what I see next, and when it happens, I think it's going to happen very quickly. I think we're very close. Fortunately or unfortunately, depends how you look at it. I see it as fortunately because I want this to end, and I see it as inevitable. And just let's get it over with already and peel off the Band-Aid. And unfortunately, for those who have no idea what's going on and they'll only find out at the last second.
Yeah, so talk to us about the disconnect between economic data and market sentiment, because the S&P and especially the NASDAQ has been performing very well this year despite a number of alarming economic indicators, such as several things you've already mentioned during this interview. So is it just that people are too used to the era of near zero interest rates and they're holding on to a fading dream that there's going to be another bull market, good times are here again? Or what's your take there?
I have a pretty simple answer to this question, that there's still a lot of extra money out there that funds and hedge funds and whoever manages money, the big players that really move prices, they got to put it somewhere. So they're putting it where their algorithms say to put it. And there's still a whole bunch of hangover money from the lockdown printing era. And it's got to go somewhere. So that's where it's going. I mean, I don't really subscribe to the view that the stock market and the economic news are related in any tight correlative way. I mean, eventually economic news is going to push stocks down because people are going to realize that, everything is falling apart, and stocks are, even if they're going up in value, they're going down in value because inflation is going faster, and they've got to go into real assets, and that's going to happen all at once. So what stocks are doing? I mean, even you could even say, like, you're arguing that stocks are rising, but like since 2022, since they stopped printing money, printing more money, they haven't gone up. They haven't even gone close to a higher high, and they're down. So this looks to me like the extra sideline money is just being sucked in, and we should stop paying attention to like these short-term waves and trends, and things will go up and down until they fall, and that's where we're going.
So I'm wondering if you have any opinion, or if you've looked into this IMF, this CBDC type of crypto. I don't even know what it is. They call it the Unicoin, which is so ridiculous just on its face. I don't know who came up with that, what marketing team came up with that. But they call it a digital cash store of value innovation, which sounds like they asked like ChatGPT to just throw a bunch of buzzwords together that the crypto kids are hip to. So I'm just wondering, this thing seems like a joke, but is this serious? Is anyone going to use this thing? And how do you think they're going to try to push this technology, and what is their end goal here?
I don't know much about this, and I'm not a crypto guy, and I don't have a technical mind like that, but I have a logical mind. I can understand logical constructs. That's my strength. So in terms of how it works, I have no idea. But what it seems to want to do is to put an AI system in charge of the monetary policy of this crypto, which would act like the FOMC board of this cryptocurrency and adjust things to keep prices stable in terms of something. The question is, like, going back to the pyramid and the Misesian regression principle, that any new currency has to be based on the price array of the immediate past, or else it's not a thing. It doesn't work. Because then the prices are meaningless. So they have, let's say, a hyper-intelligent robot with a huge brain that's in charge of the monetary policy of Unicoin, to keep it stable in, it looks like, again, dollar terms. Because in what other terms are you going to keep it stable? So it's just a substitute for the dollar again. It's just another way that they can control the dollar flows. And the funny thing is, like, this goes back to the reverse repo point, where the Fed didn't realize that stuffing $2.3 trillion in reverse repo would suck money out of deposits. The selling point of the Unicoin, I believe, is that it takes away the need for corresponding banks to be involved in international transfers. Because then you have the AI system managing it and matching buy and sell orders by itself. You don't need banks to like be the money market makers in this market. So if they cut out the banks, then they cut out the profit for those banks, and the banks can't make money doing international transfers, so they collapse again, because this is where a lot of their income comes from. And then they destroy the banking system, even if this thing succeeds. And therefore, when they destroy the banking system, the money supply collapses. They have to print a bunch of money, to keep the financial system going. And then it amplifies the problem just on another layer of the pyramid. Like now let's say we have the problem at level 3 of the pyramid and all the mishigas and craziness going on there. So the CBDC, the Unicoin, will like just make the problem more evident on a higher level of the pyramid and much worse. Like there's no escaping the base. The base is always gold and silver. The CBDC or the Unicoin cannot defy gravity, because everything falls to the ground, and the ground base of the financial pyramid of all of society from the beginning of monetary times is gold and silver, and there's no escaping that, just like there's no escaping our own mortality.
Very well put. Now, what's your take on these 15-minute cities that are being planned? I really wanted to get your opinion on this, because they've got some of them lined up in the UK. Canada's talking about doing it. People are saying the agenda behind them is sinister. They're going to try to lock people into a small area, that it's connected to like tracking one's carbon footprint, so that they're going to say, well, if you stay within this city, you won't use any of your carbon points up, when they eventually introduce potential CBDC, social credit score, stuff like that. And if you want to leave, that's fine. But apparently they're even engineering some of these places to make it more difficult to travel outside by car, to make it take more time, to make it more inconvenient. And of course, in the name of combating climate change, reducing people's carbon footprint. So what's your take there? Are people blowing this out of proportion, or is this actually a threat to people's freedoms?
Well, this relates to CBDC. Like theoretically, is CBDC, if it were to be enforced and to work, would it destroy our freedoms? Absolutely, it would destroy humanity. But am I particularly worried about it? No, because the system is so inherently unstable as it is already, that the next layer of tyranny can't be sustained for long. Like each level of tyranny, no matter what kind of tyranny you're talking about, just people bossing other people around and killing them, or however you want to describe it, rests on the stability of the previous generations, right? It sucks off the productivity of the past. And there's only so much you can steal before everything is hollowed out and everything collapses. So yeah, are they building 15-minute cities? Yeah. Are they going to say it's amazing and it's going to help everyone and it's going to free us? Yeah, they're going to say all the great things, safe and effective or whatever. Is it really trying to enslave us? Yeah, it is. If 15-minute cities existed, would we be enslaved colonies and concentration camps? Lahavdil, Jewishism, but not exactly concentration camps, but the same kind of idea of herding people into areas for whatever purposes you want. Yeah, they're trying all that. And eventually, would it lead to the mass slaughter of humanity? Yeah, sure it would. But is it going to last long enough for that to happen? No, it's not. You don't have to worry about it. So, they'll build all these like amenities for you to stay within your 15-minute range, and then they'll run out of money, and then you'll have amenities closer to you, and then we'll be in a new society, and everything will be fine after a period of intense problems and war and instability. But we have to get through that. It's not going to be the case where they're going to find an island of stability in maximum tyranny where we become slaves forever. That's what, the liberty people are worried about. But I'm not worried about it, because it's impossible. You can't do this. From a religious standpoint, you could say God won't allow it. But, the world operates through logical rules that God set up. And one of them is that you can't keep stealing things that don't exist, because you run out of stuff.
Yeah, I like that light at the end of the tunnel view of things, because you're right. A lot of the libertarian and sound money gold and silver bug chatter that goes on online. People are literally terrified of this, and they're saying the future is going to be grim. This is what's going to happen. They're going to make everybody slaves, as you're alluding to. But I like that you're looking through it at a lens of logic and kind of picking it apart in that way instead of going straight to the doom and gloom side of things. And I do want to switch to the issue of mass compliance and, which was kind of scary what we saw during the pandemic. You often wear a shirt that says, "I will not comply." And anyone who follows you on Twitter knows your stance on government coercion, a stance I obviously share when I left Canada to come here to the Balkans. It seems that gold and silver bugs almost universally saw the incredible overreach implemented during the pandemic as a clear violation of civil liberties. And those with no understanding of sound money, it felt like to me, were more easily duped. So do you think there's some sort of connection there? And do those that believe in sound money, is it just easier for us to see the charade, not to like toot our own horns or say we're special, but is there some sort of connection between those two?
Let's put it this way. The gold and silver people, at least I'll just tell my story, like how I came to it. Like, there were certain things that made me very uncomfortable with how the economic system supposedly worked that, I kind of like said, I don't like that. And I tucked it away. I said, I'll solve it later because I don't really know now. And the second really salient, the first two. Okay. So I tell this story a lot. When I found a 1,000 shekel bill in my father's office drawer, an old shekel bill with Maimonides on it, and I thought it was 1,000 shekels, and I knew what a shekel was. It was like about 3 shekels to $1 at the time I found it. And I'm like, Avi, you have 1,000 shekels in your drawer. He's like, oh no, that's the old shekel. It hyperinflated to 0, and now it's worthless. So I'm like, so like, but money always inflates and prices are always going higher. He's like, yeah, but that's how an economy grows. I'm like, what? You just said it died, but now it is growing. What? I didn't get it. I was like, okay, whatever. I don't understand. I'm like a little kid. And then the second thing I didn't get was like in economics class in high school. They were talking about how the dollar used to be gold, but now it's just fiat. And I was like, what's fiat? She's like, well, it just has value because the government says it does. I'm like, well, what if people don't believe the government? Like, how does that sustain us? It was like, what? I was like, okay, I'll just put that on the test. Like, okay, fiat means government says that. But like, what the hell is this? And then when you hear, like, when you see that the other problems, and then you go back to the foundation, you find out that it's empty. It's like, okay, you gotta go in the other direction and fill it with some content that isn't part of this system, because the whole base of it is emptiness. Literally. So the gold and silver people, it's not like we go into this like community because we want glory and power. And I mean, we're laughing. We're the laughing stock of everybody. And we've been for many years, but we don't care because we know it's true. But it's the same thing with the people who research the foundations of medical, and I don't want to use the wrong keywords here, but like the foundations of the medical establishment, whatever they may be, you will find out if you look deep enough into them that their foundation is also empty. So the people that understand that the monetary foundation is empty will be more likely to listen when somebody says that the medical establishment foundation is also empty and based on structures that look nice but have no content. And we're not afraid to say that everybody is wrong and everybody believes in the same nonsense. So that's the connection. We're not afraid because we follow we allow the lack of comfort in our souls to blossom and tell us something different, and don't hide away from it.
So is all this authoritarian overreach that has been occurring, particularly became apparent during the pandemic, but I think it's been ramping up for a little while now. Is this a sign that the legacy system is dying, that it's like a wounded animal, it's cornered, and it's lashing out for survival? And if, you spoke about how you think the other side of this, after we go through some pain, is going to be a better system. So do you think there's also a risk of the other side of this just having everybody being misled again and having this kind of cycle of, I don't know what you want to call it, totalitarianism continue and continue to grow in the Western world? Or will it be kind of a return to sound money that restores sanity and creates a better society?
I guess you could couch that question in other terms, like how the question you're basically asking is, how big is the disaster going to be until we all come back to our senses? And the truth is, I don't know the answer to that question. I mean, I could tell you in World War II, in that collapse of society after that resulted from, a printing of money in the 1920s all over the world, and ended up in people not knowing what to do. So they went to a whole bunch of dictators, which includes Stalin and Hitler and FDR, all of them. I'm putting them on the same peg here because I'm sacrilegious. They're all the same to different degrees. I mean, don't forget that FDR also put a whole bunch of people in camps. He just didn't murder them straight out like Stalin and Hitler did. But they were basically doing the same thing and stealing gold. I mean, FDR stole all the gold in America. Hitler stole all the gold in Germany. They're all doing the same stuff in different degrees. So we view one of them as a hero and the other as a villain, but they're all villains of different degrees is the reality of this thing. There's another instance of empty history in the standard World War II story. So what I would say is the more gold and silver that we buy or that we exchange for money substitutes, what enabled Hitler to go crazy and kill so many people was that he had a lot of money because he was able to steal a lot of it. And what enabled FDR to start Social Security and all his tyranny that he did in the 1930s with the New Deal. And no, the New Deal is not as bad as what Hitler did, so I'm not saying that, okay? But it was the same centralizing of power for different reasons, for different ends. They all stole a bunch of money and then killed a bunch of people. Basically what they did. So we need to get the money away from them. The people that have the weapons, we don't want them to have the money too. We want the money. So we need to get that so that we can be in control of the world after they run out of it. So that's what I advise we do. We don't want the bad people to have the money. We want the good people to have the money. So the good people should buy the money now before the bad people have it all.
Well, that's a great note to end things on, Rafi. Before I let you go, for those who want to learn more, could you fill us in on what the Endgame Investor is all about, and also anywhere else you want to direct people online?
I could describe the Endgame Investor in different ways, but I would say that, we all have a gut feeling deep in our souls that fake money is bad and real money is good. And so I give a philosophical and trading foundation to no matter what is happening day to day in the gold and silver markets, which I go into, and I go into the Austrian conceptions of these markets, Austrian economics conceptions. That's how I try to frame things. But once you understand the logical foundation that gold is literally money right now, and everything that we use as money substitutes only have value because they are still exchangeable for gold, then, when you take a portion of your income and you put it away in metals or metal stocks or many other speculative vehicles, which I also deal with, you're philosophically okay with that because you understand the reality of it. And that's what I try to instill in people and give them some emotional stability in what's going to be a crazy time ahead. So if you believe in that, then I can help give you a base and a rock solid or a gold solid understanding of what money is. And I anticipate that after this is done, I'll probably retire and move on to something else. But until then, you can sign up at the Endgame Investor. Just put it into any search engine, and I write about 4 times a week. And I do other things too. I do biblical commentary into these areas, where I give a once-a-week video to my patrons on Patreon, patreon.com/endgameinvestor, or my YouTube channel at Rafi Farber, which is copied on Odyssey if you don't like YouTube, and I don't like YouTube either. And Twitter, you can follow me at Rafi Farber.
Okay, great. Well, I'll put links to all those in the description below so people can check that out. Thank you so much once again for joining us. It's always a lot of fun when you come on, and looking forward to continuing the conversation sometime in the future.
Thank you.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.